Welcome to The Explainer, where we break down big ideas. Today, we're getting inside the head of a legend, one of the greatest investors of all time, Warren Buffett. We're going to unpack the simple principles behind his incredible success, using the Warren Buffett Way as our playbook.
Okay, just look at this number, $30 billion. That's what Buffett's net worth grew by in just a 10-year span. It's a number so huge, it barely feels real. So the question is, how on earth did he do it? Was it some complex secret formula? Nope. The answer is actually surprisingly simple.
So here's our roadmap. First, we'll uncover the big idea behind that $30 billion. Then we'll meet the teachers who shaped his entire philosophy. After that, we'll get into the nitty-gritty, his 4 great investment rules. And finally, we'll talk about the most important part, how to actually think like Buffett.
So, what's the big secret? What's the one core concept that holds this entire strategy together? Well, it's not about high-frequency trading or complex algorithms. It all boils down to a simple but incredibly powerful metaphor.
And there it is, the snowball. This one quote explains almost everything. The wet snow, that's a fantastic business, one that can keep gathering more and more value as it goes. And the really long hill, well, that's just time. Lots and lots of time. It's all about the unbelievable power of compounding. You just find a great thing and let it roll for decades. But here's the thing. Buffett didn't just dream this up out of thin air. He was a student first and foremost. His philosophy is really a blend of ideas he learned from 3 absolute giants in the field.
His journey really starts in 1949 with his professor, Benjamin Graham, who taught him the hard math of value. A decade later, he discovered Philip Fisher, who taught him to focus on the quality of a business. And the final piece fell into place in 1978 with his partner, Charlie Munger, who just completely broadened his way of looking at the world.
And this is where it gets really interesting, because he basically took 2 opposing ideas and fused them together. From Graham, he learned the cigar butt approach, which, yeah, sounds kind of gross. The idea is to find a mediocre company that's so cheap it's like a discarded cigar with 1 free puff left in it. It's all about the price. But then you have Fisher, who said, forget the junk, find amazing companies and hold them forever. He was all about the quality.
And then Charlie Munger came along and added the secret ingredient. Munger pushed him to think beyond just finance, to build what he calls a latticework of mental models, which is just a fancy way of saying you need to borrow big ideas from psychology, history, and science to really understand how things work. So Buffett's genius is that blend, buying a great company, like Fisher said, but only at a fair price, like Graham taught, all while using a broad worldview, thanks to Munger.
Okay, so taking all that wisdom, Buffett created his own system, 4 core rules for investing. You can think of this as his personal filter. Any company he looks at has to pass every single one of these tests. This is how he finds those perfect snowballs to roll down the hill. The process is just so beautifully logical. He starts with the qualitative stuff. Is this a good business run by good people? Only if he gets a yes there does he move on to the quantitative part. Do the numbers make sense? And is the price right? Let's walk through each one.
First up is the business tenet. Is the business simple enough that he can actually understand it? He's famous for this. If he can't explain it, he won't buy it. He also looks for a long, consistent track record. And, most critically, does the company have what he calls an economic moat, a durable competitive advantage that protects it from rivals, like a castle moat?
Second is the management tenet. A great business can be destroyed by bad managers. So he asks, are they rational with the company's money? Are they honest with their shareholders, especially about mistakes? And maybe the most important, do they resist the pressure to just mindlessly copy what every other CEO is doing?
Okay, third, we have the financial tenet. This is where he tunes out all the short-term noise from Wall Street. He focuses on things that really matter, like return on equity, which is just a measure of how efficiently the company makes profits. And he has this brilliant little test. For every dollar in profit that a company keeps, it has to create at least 1 new dollar of market value. Simple, but so powerful.
And finally, we get to the value tenet, which comes straight from his mentor, Ben Graham. Once you've found this wonderful business, you have to figure out what it's actually worth, its intrinsic value. Then you wait. You patiently wait until the market offers you that business at a big discount. That discount is your margin of safety. It's your built-in protection in case you're wrong.
So knowing those 4 rules is one thing, but the real secret, the thing that separates Buffett from just about everyone else, is his mindset. It's less about what you know and way more about how you behave. It really all comes down to emotional control. This famous quote is basically his entire operating system. When the market is going crazy and everyone is getting rich, he's getting nervous. And when the market is crashing and everyone is panicking, that's when he starts to get interested. He uses widespread fear as a buying opportunity instead of getting caught up. And this discipline all stems from one core idea: knowing your circle of competence. Look, Buffett is the first to tell you there's a ton of stuff he doesn't understand. The key isn't to know everything, it's to know what you don't know. He sticks to industries he can understand inside and out, and he simply ignores everything else.
So, the biggest lesson from the Warren Buffett way is this: success in investing isn't about having the highest IQ. It's about having the right temperament and the right discipline. It's about building a solid framework and then having the patience to stick to it. And that really leaves us with one final crucial question. Warren Buffett knows his circle of competence. What's in yours?